Welcome to Profit Insights with your host, Dusty. Today, we're diving into the currents shaping the financial world, focusing on market trends, key financial stories, and a few investment tips to help you navigate the tides. Let's kick off with a look at the recent market action. The U.S. equity markets pulled back slightly on July 11, 2025, after a day of record-setting gains. The S&P 500 inched down 0.33%, the Dow Jones slipped 0.63%, and the Nasdaq dipped 0.22%. Small-cap stocks took a bigger hit, with the Russell 2000 dropping 1.28%. For the week, the Dow logged a 1% loss, while the S&P and Nasdaq each fell about 0.3%. Despite these slips, the year-to-date performance remains solid, with the S&P up 6.4%, the Nasdaq up 6.6%, and the Dow up 4.3%. Early trading was bogged down by renewed trade tensions. Financial and material stocks felt the weight of renewed fears about tariffs impacting corporate profits and supply chains. Yet amidst this pullback, AI-related stocks, like Nvidia, crossed the remarkable $4 trillion market cap, showcasing the ongoing enthusiasm for semiconductor and AI plays. The unexpected announcement from President Trump of a 35% tariff on Canadian imports reignited trade war concerns. This move heightened fears about inflation and potential Federal Reserve actions. J.P. Morgan Chase CEO Jamie Dimon weighed in, suggesting markets might be too complacent about future interest rate hikes, with a forecast of a 40 to 50% chance of another increase, higher than market expectations. Fed Chair Jerome Powell also acknowledged that these tariffs could elevate inflation expectations, while entities like the OECD have adjusted U.S. growth forecasts accordingly. Shifting to some striking corporate moves, Levi Strauss impressed with an 11.3% surge after reporting first-half sales and profits that beat expectations. Their optimistic outlook for the year ahead reinforced the confidence. Meanwhile, Kraft Heinz plans a major structural shift by splitting into consumer products and agribusiness units. And AMC Entertainment made waves with a rally following debt restructuring and new financing announcements. On the commodities front, gold continued its climb, marking its third consecutive gain amid market anxieties, closing up 0.4% at $3,335.62 per ounce. The oil market remains steady, grappling with global demand concerns. The U.S. dollar saw a slight easing, while Bitcoin breached new heights, reaching $118,000 on strong institutional inflows and favorable regulatory conditions. Turning to economic indicators, next week holds potential market-shaping news with the June Consumer Price Index and the Empire State Manufacturing Index. These reports will offer fresh clues on inflation and economic activity. The labor market remains robust, with initial unemployment claims dropping, signaling ongoing strength despite fluctuations. Looking ahead, all eyes will be on the second quarter earnings season beginning next week. Major banks like J.P. Morgan Chase, Citigroup, and Wells Fargo are set to report, followed by Goldman Sachs, Bank of America, and Morgan Stanley. Analysts anticipate a combined $26.4 billion in trading revenues and modest profit growth. As we navigate these dynamic times, remember that understanding market catalysts is key to making informed investment decisions. Stay tuned for more insights next time. And as always, remember, when the dust settles, only the truth remains.